Where will this all end up? If you look at privacy, when you look at regulation, really being spearheaded by, I guess, the European Union, but then also, reaching across the channel and across, of course, the U.S., where does it end for a lot of these big tech companies?
Well, I think it ends in more regulation and higher costs for these companies, and that creates a significant amount of near-term uncertainty in terms of how advertisers are going to respond to these changes.
Okay, who will be the winners and who will be the losers? I mean, you say that you felt vindicated after you fell off Facebook, but Facebook could actually change and morph into something else.
Well, I think that's possible. I think Facebook's business model is fairly dependent upon their advertising revenue. If we take a look at Facebook and Twitter, those are their primary revenue sources. If we look at a company like Google or Amazon or other major platforms, they're showing us that they have significantly other opportunities to generate revenue, particularly cloud computing, which really came through for Google in the most recent period. So Facebook is very, very dependent on its ability to expose a large number of users to all sorts of inputs, conduct this really large-scale psychological experiment and sell that information to advertisers. That's what's really coming under pressure, and Facebook doesn't have a lot of other options.
John, what you people invented with John Rogers out in Chicago years ago and the Calvert Social Investment Fund, which at the time, folks, was absolutely revolutionary, was, well, let's not buy tobacco, let's not buy this, let's not buy that. What has changed in social investment now? You were odd. Now you're the norm. What is your day like in explaining to institutional money how to do social investment best?
Well, thanks for the history there. That's exactly right. I think what has really changed today is the amount of information that we have to work with to understand both what to buy as well as what you mentioned, what not to buy. So today, our day is really all about understanding what is financially material in terms of environmental performance, social impact, societal impact to companies.
Put to rest the idea of rate of return. What is the tangible research you have, the tangible reality of rate of return or internal rate of return of social investment versus a blended SPX portfolio?
Social investment can do anything non-social investment can do in terms of creating investment outcomes. There's really no reason to think about the return stream being different from social investing.
Can you say the return stream is better? Can you say you're going to pick up 30 basis points with me?
Well, I think you can say that. It depends on who is really applying the research, though. So, as I said, we can do anything that you can do with non-social investing. We manufacture indexes at Calvert, and they generally track the broad market, sometimes with slightly less risk. But that's the big measure. Can we create an inventory of securities that is capable of replicating the broad market returns? From there, sure, you can outperform, especially if you add good, active stock picking to that equation.